Well, everyone, I want to thank everybody to join us. I'm sure people may still continue to trickle in, but I want to be respectful of everyone's time. Really appreciate everybody coming to join us to see what we're up to. And Chris, I believe if you could share the slide, we'll kind of.
You'll need to unlock your iPad first.
Okay, guys. So again, thank you for everybody for being here. And want to just introduce you to what we've started doing. And this is an investment club that we have launched alongside with Fractional as the platform. And we're looking to, educate, partner with, and just generally get some projects going. And we're looking at the agritourism sector, the hospitality, short-term rentals, and I'm sure most of you guys either know me or Envision or some part of us, then can relate to where this is going. So, Envision Holdings Group, we're just a completely vertically integrated real estate development. We've grown into that, and it's been challenging, but it's been a blessing all at the same time to go from a general contractor to start adding in the retail and the design center aspects for all of our material sources, to grow with land development opportunities. We've added acquisition department. It's just really creating the whole sphere so that we can be that top service entity all under one roof, and that's really everything that you're about to see here, is built, financed, operated under one roof, which means, something a little different than some of the other service entities out there. When something needs to move fast, we're not waiting for a subcontractor or another entity that we need to kind of align with. We're able to move a lot freer through the system, and that's really what I was designed to build. And I'll kind of just say this plainly, and it's not to brag, you guys, but when it comes to the short-term rental industry and hospitality here in the Shenandoah Valley, I'm really proud of, that there isn't much that happens here that Envision hasn't been either directly responsible for or contributing heavily towards. And I really do wear the tag that we're the Valley's leading service entity for short-term rentals. It comes with some weight, a lot of responsibility, but we've got a really great team behind us. Not to name everybody and read their bios, this actually whole program will be available to review at any given time that you like from our investor deck here. But Jessica, she is director and founder of Oink here, which is a nonprofit animal sanctuary. We've got Jason Oliver that leads our real estate investments and acquisitions division. And then Chris Carroll, our director of operations, the one in the middle of everything. She's so critical to it all. And I just really want to name her out. That Chris will be heavily involved in managing the investor relations, lending coordinations. So she's really our, point person from commitment through close. So we'll navigate that together. Okay, so the investment club overview. We set some really clean criteria around this so we can really understand and everyone can clearly see the definition of what we're trying to accomplish here. So, many of you in this room are already our clients. I consider you partners. You've trusted us to execute your vision. And tonight we're formally inviting you to join us at our table, to collaborate and share in the vision that we want to build together. And then before we really talk about return on investment, let's talk about how we can really protect your capital. And this isn't a bet on a future refinance. Um, this design is really structured, so that the operating income is the critical leverage to retire all of the debt in its own. Not banking on what the economy or the market may do. We really want to build a machine that can perpetually support itself. And a big part of being able to do that is I look for opportunities where we can really utilize all of our vertical integration. So I really like taking it from raw land. We can really control how it's being developed. There's not someone's partial vision or something that we need to adapt. So I really like to come into raw land, bring in the development team, really put the planning together, follow it up with really great designs, our construction experience, and all of our operation leadership. Then when we start looking at how the deals are, and this one here on the screen is really a first potential deal. The the thesis of this investment club isn't any particular deal, so really wanted to kind of focus on that just a touch. Is we're not only focused on one deal. This criteria can be measured and looked at across a lot of different opportunities that I see. Got Jason and his team out there constantly looking for land leads and distressed sellers. So we just built a bubble around what works. But if anybody's been kind of following along a little bit on social media, or some in my closer circles have heard the word Shenandoah Haven. And this one does check a lot of boxes. We found it a few weeks ago. It's 151 acres, riverfront. I think it's close to like 1,700 feet, 1,600 and some odd feet of river frontage, 40 acres along that area, and another 112 of wooded ridge lines, overlooks, highland plateaus. It's just, it really checks a lot of boxes when we're looking at what the market wants out here, what the guests want when they come here. When you think short-term rentals in the Shenandoah Valley, it's a little overcast tonight, but you think of the views. You think of, I'm here at Retano Vineyard, and it's got some of the most spectacular views in our little region here. So I mean, it's important. It's an image of what we're trying to build on. But to get a little bit further into it, like, we need these deals to work. So, and I know my clients hear me talk on this a lot, and the people that I've partnered with in the past, is I really need to see all of the numbers. I need to see how is this thing going to operate and generate return, and is it really truly going to support itself and do what it's designed to do. If you go back one just a little bit, Chris, this one. And then just staying in this for a second is like, so I really look for how can we stack multiple revenue streams. There's a few ways to do that in the short term in hospitality. You've got glamping sites, you've got people doing tiny homes. Everybody knows, like, we do a lot of these luxury short-term rental cabins, whether it's a den product or a custom design product. It's just one part of a multi-revenue stream is just at least doing multiples of them. So usually when I look at a piece of land, I try to determine, can I at least get 2 cabins or 4 cabins to where I can pair up septic systems. I can use, maybe 1 well or 2 wells for 4 cabins, and really dial down that land development cost. So, and again, that brings us back to like not being your normal general contractor, where if I went out and wanted to have someone build me a custom home or a couple of these, I would suspect a lot of the builders out there were like, okay, it's going to get it's a one house, it's one septic field, it's one well, we're going to do all this like one thing. And instead, we really need to strip them out, see where we can get efficiencies, see how we can make the money work, and be just layers of revenue protection on top of these investments. Um, so again, this one in particular, 151 acres, riverfront. We've got ground that we can build cabins on. We've got areas along the river where the floodplain and different zoning setbacks still allow us to do all of the glamping of the domes and the safari tents, yurts, those types of structures. So just looking at all the different ways that we can optimize that cash flow off of an asset. And then this one particularly, it's all zoned agricultural. So when you've got a big parcel of land here in Warren County that's all agriculturally zoned, and it's really in the state of Virginia as well, and I'm sure other states, but here in the Valley, it's all agriculture. So we can do what's called agritourism. And there's a lot of ways to pull that lever. You can do a certain amount of crop production. You can have a certain number of livestock. Like there's a lot of different ways to pull that, to check that box. But like I showed in the earlier slide, Jessica, which is my wife, for years now, we've had a nonprofit farm animal sanctuary. So if we put those animals on this land, make that part of the experience, it does a lot of different things. It covers all the state laws to trigger the zoning for agritourism, which really does play a lot of levers on zoning. It turns, camping by right. It got short-term rentals by right, and then there's more layers of it that we'll kind of tap into this evening as well. But just the animal experience alone, if you're a family, and what's kind of better than staying at a really nice place, and at the same time you can entertain yourself and your children with the ponies and the goats and the pigs, and just a whole round memorable experience, a good cultural experience. We do have plans to go further than just the experience. We want to be educational. We want to be part of the community with that nonprofit that bolts beside us. A lot of what we're talking about tonight is really the cash machine, though. We want this thing to make cash flow, but using that nonprofit to stabilize all of those rights, it's really beautiful. And I'll see that the one in the bottom corner here, like no matter how I do these numbers is conservatively is reasonable, and I see all of the data because I love the data. I love working with my teams and seeing their properties, what they produce as they get seasoned. And so we're staying in the conservative area, and we're still projecting $2.5 million in annual net cash flow, not gross. And I'm staying conservative, and we'll dive into that as well. But 2.5 million annual once this thing's stabilized. And at the stage that we're at now, something that's not in the slide, because the slide kind of came together as the due diligence was processing, so I know it's not in here. The price tag was, this piece of property was able to be acquired or put under contract for basically $1.7 million. I knew off the bat it was worth every bit of that. We had an escalation clause in ours. We offered what they asked, and we ended up at 1.7 and some change under contract. Had the appraisal come out, and it appraised for 2.65. That opened a lot of flexibility in getting funding, obviously. but it just kind of set that pace. So we're set to close next week on this piece of property. And the target raise of the discussion that we're having tonight is in the 700K. So about $700,000 that can play into some of the stages. The first stage is opening up camping and glamping. The second stage is some tiny home villages. And the third stage is some more permanent high-end custom homes, cabins up there. So that's the first potential deal. So yeah, at a glance, 151 acres. It's 3 parcels. There's some, about almost 1,700 feet of river frontage, and it's gorgeous. It's actually right down from Downriver Canoe Company. So they do the canoe rentals, the kayaks, and the tubes, and it's just a really nice stretch of the river here in our county. And again, the stabilized net cash flow, and I kind of broke it into where those lie. And the glamping being kind of the first phase, it's a lighter lift on what capital needs to be deployed. Still costs quite a bit. Not, that's why we're asking for $700,000 to be accumulated and accounted for. But it is one of the lighter lifts. We're going to do several domes, safari tent styles, the glamping, and then we'll also have about equal parts primitive sites, which is your fire ring, your picnic table, and some of the closer ones to utilities may end up with some electric and a water hose bib. But just that revenue alone supports so far into this project by itself. It launches and just catapults into the tiny home series and into the cabins. We'll go down a little further. Chris, if you'll go ahead and change it again. So yeah, another little summary of why this property checks the boxes of our concept. Again, that river frontage, it really plays in. It adds a premium to our average daily rate. I've kind of got some notes there, playing at the river frontage drives closer to that $420 to $470 average night. And that's blended, of course. The agritourism protection, we're choosing to put the sanctuary on there. Again, there's other levers to do that. If we look at some other properties down the road, we may decide that they need different things than the whole sanctuary, but this is a nice big property. So really what it does is locality cannot regulate the STR, without a substantial impact report. So really we're more controlled by our health department capacity and VDOT. The STR by right as well, basically over 5 acres is right now the over 5 acres, it's by right here in Warren County. But with that agricultural tourism, it kind of overrules that as well. But this still keeps in the glamping and camping is by right. So we don't need like a conditional use permit, which anybody in the industry already kind of knows that you can, when you need something and you have to ask for something, you can be told no. This is that we don't have to ask kind of category here. The national park access obviously is literally right down the road. There's a couple of different places that we can go. This particular property to the I guess that would be like the west property line. It backs up to 6,000 square feet of national forests. Yeah, and then there's some little bit of market data there on supply year over year and what we've kind of seen with our own data, and everybody's is comparable. I would venture to say it. When you start looking at that, you're really dealing with how good is your property management, who's hosting the properties, and that's where you'll see, some pretty decent swings there, but generally speaking, just the supply and demand, like we are a popular destination area. Yep. And then the animal encounters. Again, I using data that was available to places that do offer this kind of thing. You see a little bit more of a premium, and it makes sense. You've got horses and goats and pigs and cute little animals, and you do it right. This would be a staffed facility, but you set it up as the experience, and at the same time you're creating a home for these animals that need somewhere to go. There's a way to educate the community and individuals. There's Future Farmers of America. There's 4-H clubs. There's a lot of things that can draw guests to our campground, cabins, and event centers. Yeah, and then it appeals to basically the highest loyalty guest demographic, the families with the children. This is. I know when my child was little, this would have been the place to go. All right, so back to the three streams of revenue and how kind of each one funds and de-risks the next. By going in with the glamping, and our goal would be to actually catch some of this fall peak season. And we're prepared to move rather quickly. We do have funding available to do so, and we would at least get, a certain number of glamping spots actually open, facilities in place. We've already done soil samples and had everybody involved, and we do this at such a big volume. I might be speaking to it a little lightly. Some of these are like actually big deal things that people not knowing. It looks pretty heavy, but I mean we're developing 11 major sites right now. So my soil scientist is a phone call away, and I asked him to come over, and he came over the next morning and we did the perk tests on the whole property. And our septic installer does dozens of them for us every year, and basically said, as soon as I'm ready, I need you here. And he said, I completely understand. So for us, it's a little bit different because we're doing this day in, day out. We've created these relationships, the trust is there, and we're keeping, these folks busy. So they'll move for us. But the goal is to get some revenue going within the first 30 days, or right behind it. It looks like about 4 to 6 weeks that we can at least open our primitive sites and start erecting the domes in the locations that they would be in. And again, we own the land development team, so when we need to bury utilities, we just move the equipment over there and schedule the guy to go do the thing. So people are scheduled to be at this property the day after we purchase it. Again, that efficiency just really helps it. So when people hear me say I'm going to do this within 6 weeks, that's how, and a lot of people can't do that. But get the cash flow going. We understand we'll be going into the winter months. But at that point, the strategy is everything seasonal. And we've been living in a seasonal industry my whole life. So we'll get as complete and as far as we can with glamping and have some season left to generate some revenue. And as the colder months come into play, nobody's coming to camp, we'll go heavier into our land development stage. It's really the best time to land dev. And we won't be, offending anyone. So we'll have a lot of equipment going on the property, putting in infrastructure, building pads, and the prepping for utilities and building pads for the tiny homes. Some of you guys know we have a facility in Winchester. We've expanded that a little bit over the past year, and we're going to be producing tiny homes all winter. It's a dream come true for some of my crew members. They're going to be in there all winter, just cranking out tiny homes and filling our parking lot and our in our area, and as they're ready and groups, we'll move them out and put them in place. So the goal being by spring of 27, we've really dialed in the glamping. We've learned what we learned during the short soft opening that we have this fall. And we reopen in the spring with at least 12 tiny homes, 82 sites of glamping, and combined, we're conservatively pulling in around, 1.7, at least 1.7 to 1.8 million annualized blended. And we have the seasonal chart down below what that looks like, broken down month to month and predictive. And at the same time that we're open and doing the land dev won't stop for about the first 18 months on this site. But it's such a vast site, and the lay of the land allows us to build up the ridge. And then as we open the lower sides, the river lots and the immediate wooded ledge, we'll reverse and go to the farthest corner of the property and work our way down. And that's where the cabin series will go anyway. There's going to be on the ridge overlooking the river, seeing the mountain backdrops. So, to try to keep guest experience high, we're trying to think of everything intentionally. The risks, we're always measuring the risks, and how do we control them? The regulations super low. Already starting out with STRs and glamping by right, utilizing the agritourism zoning. So, I mean, as much as the impact would be high, we've negated it. We've taken it all the way out of the equation. Construction cost overruns are always something to be, adamant about. The way that I'm structuring this, not only by it's us doing it, and we have direct control over our management, our staff, our materials, everything being sourced through our building material supply and design center. We've got a lot of control and protection in that realm, and we haven't just started doing this. So our teams are really seasoned. We're past learning curves. So we put a lot of safety in that. But on top of that, we by partnering with everybody that we do, we just really control that cost. I know what I was going to say. As we look deeper into the investor deck, I'm doing a breakdown of these units that we've priced out so that there's built-in equity. With build enough of these cabins to kind of know where the appraised value and the market value is going to fall. So we're making sure that we're in that like 80% loan to value range, based off of what we believe the appraised value will be at completion, so that we know that we can roll it into a DSCR structure, that we've got built-in equity as soon as we're done and we get the occupancy on them. And a lot of the clients that I work with, they've heard this before, like that's really the rule of thumb. If we can build it and maintain some equity when we're finished, so that the notes roll into a clean DSCR, like we've really accomplished what we were out to do. And then the other debt risks, the bridge loans that we're looking to acquire. This is one of them. Literally the net operating income supports this, and not just a little bit. And we're using conservative numbers. We're using realistic numbers that I would use if I were speaking to anyone, but they are on a conservative side. And they're still showing that it'll carry these notes at 3 to 3.5 times. The debt to income ratio on this, it really just looks really well. Any kind of tiny home delivery delay, it's a really low risk. We're building them in our own facility, using our own materials, our own crews, and the impact would be, medium to low anyway. given the seasonality of it, we'll have all winter to produce these 12 units. If there's revenue shortfalls, again, I'm staying conservative going into this, being realistic. Septic and well, and this might have been wrote before we got all the results back. So we already do have septic systems on the property, and actually the one that I'm referring to was put in 2022. So it's only 4 years old. It's a beautiful, clean system. I know the people that put it in, I know the designer and everything. We have 2 wells on the property. One of them was put in 2022. One of them was put in back in the 60s. We're going to be able to revive that one. But the one that was put in just a couple years ago is perfect. It's brand new. So what that also gave us was a lot of data on what kind of systems we're going to be able to put in and the areas that they're at least in. And we did perk tests further up so that we could understand what those are going to look like. Down in the bottoms, these are all conventional. If you know, soil analysis and that kind of stuff, like there's alternative systems, there's conventional systems, there's treated, there's a bunch of different things. Then most of the times you add anything above conventional and it starts adding a price tag. These river valley bottom ones tend to all drain really well. You get a lot of conventionals in that. As you get up into the rocky cliffside or mountainsides, you just budget for drip systems. So we know what those numbers look like. The well depths were very, very good. The two that are on record show at about 240 to 250 feet. It's pretty great. Yeah, we're always thinking about the risks and how do we mitigate them. Yeah, so seasonal model, people that know these numbers, please look at them. There'll definitely be some time for questions and such here at the end, and we can flip back to any slides that we like. But from what I've experienced, and I've done most of them here, like I didn't build Ava Shenandoah, but I'm building the rest of them on that property. I did Skyline. I'm doing many of you guys that are here now. That peak season, it does run 80 to 80. I see 80 to 85% often on these really luxury ones. Shoulder seasons, I feel like I'm being a little conservative there. Low seasons, and then just blend it. And how many operators now are using and actually seeing only a blended 67% with luxury cabins, hot tub saunas, the whole package. With river access, and we'll just won't even talk about that. But 67%, I think I'm being conservative. The tiny homes, we just dialed it a little bit further down, but we're still going to slap the same amenities on them. The tents and the platform, like the dome units and stuff, I did have to do my own due diligence, and I'm still doing those. So I stayed even more conservative in those numbers. 40s to 50% average. I'm staying at another glamping place actually this weekend and learning more about it. But there's a lot of data that's easily to be achieved, and I've done my due diligence, and I feel like I'm being conservative in that as well, while still offering all the same experiences that the cabins have, but in a more public kind of setup. Yeah, so that's the seasonal revenue model. I think I'm being conservative. Okay, the capital stack. We left this unedited for the past couple of days as we've navigated the purchase and further understood where our capital was going to lie and how it was going to be deployed. So some of these numbers have been in favor. The $950,000 of equity at purchase definitely changed the numbers around a little bit. We are still deploying hard money for the acquisition, paired up with our own private capital. For for the glamping, jump down, but then in the right order for the glamping and the tiny homes, and even land development, I am looking to do like bridge loans. And this interest rate is not up to date. The one that we are offering in this exact conversation and platform is 15% for this exact deal. But that's how I plan to fund those developments. And then for the cabins, we've got options. We put it that way. I've got different options because obviously the cabins they're not, for the whole glamping thing, we're looking at basically a 940, call it $1 million that gets 82 sites, developed with, bathhouses, and like these aren't just tents sitting in the woods. It's a facility. That's a little bit different than these cabins that on average, cost 450, 550, $600,000 to construct. So we've got some other options in that. And if we do launch or elevate this investor club to discuss cabins, everybody here will certainly hear about it. But right now, all we're really discussing are the bridge loans for the camping tiny homes, and there may be some for land development, but we've navigated quite a bit. So we're already going to start land development as soon as we purchase. Got here, yeah. So this is basically month 1 through month 18, and that's the safe window of where we believe this thing stabilizes at the target that we've set for that window. There is a growth pattern past that where we can initiate a rural resort, and then we do need a CUP, but that is if we're really if the economy is just really booming and we see a forecast of it further out than just a few years. That's a discussion for another day. The land can support a whole lot more, and under the rural resort status, you can do a lot more than what we're initially planning to do. Right now it's 80 camping sites, like a dozen tiny homes, and somewhere between like 15 and 20 cabins. We can do a lot more than that under a rural resort. And yeah, the headline kind of says it all. Like literally every dollar of debt has a clear exit, and every exit is contained within the operations of this endeavor, and that's how they always should be. It's how every business I've built operates. This thing stands on its own 2 feet really well. It just needs help getting there. The camping alone takes us past the tiny homes, and the tiny homes just really drive the profit up. So yeah, next steps. And I know we've got Kyle with Fractional here, and he may step in at some point on this part of it, but the next steps is, commit to the club. We do have a like a bottom investment of $15,000. There is a fee to invest, and I don't want to overspeak on all the details on Fractional side of things, but there is a fee to invest in how they protect the whole structure of the club. But we find one that we want to fund, and any of them that fit our model, and we vote on it. We provide ongoing management. We show all of your quarterly reports, and this one does actually pay out every quarter for your interest. And yeah, again, Fractional handles a big part of that. They set up the LLC distributions, the compliance, all of the legality side of this.
Kyle, sir, do you want to introduce yourself?
Yeah, absolutely.
And do you want me to share my screen and walk them through the club page as well?
Yes, just give me 1 second to remember how to do that.
Okay, thank you. All right, sharing my screen here. Okay, you can see this, yes?
Yes.
Okay, great. Well, hi, everybody. Good evening. My name is Kyle Brennan. I'm the Director of Investments here at Fractional, and this is the Envision Shenandoah Investment Club. Gage has done a really great job of explaining this investment club model to you. To recap, you are committing funds to the business plan of the club. So it is a lending club, lending capital on these types of assets that he's reviewed. And these are the participations and targets. And then they've even sourced this first potential deal, which is the Shenandoah Haven that he's just taking you through all the information about. If you want to look through the slides that he just shared, they are linked here. And when you're ready and you want to become a club member, come on over here to the blue button. And this will be what your screen looks like. Unless you're new to Fractional, welcome. Your screen will look a little bit more like this. The first thing you want to do is you want to verify your personal identity. So that is you as a human being. The reason we're doing that is because you're going to become a member and an owner of an LLC with your co-club members. So the same way we're going to have them prove who they are, we're going to have you prove who you are. So that is your date of birth, your social, and your home address. Once you're verified as a person, then you can set up these different investment accounts. So you can commit as an individual, you can commit as a company or a checkbook IRA, or as a custodian self-directed IRA account. Once you've gone through these buttons, those accounts will populate here. I'm going to go ahead and click my business account and click continue. So $15,000 is the minimum on this club. It is not the maximum, and it doesn't have to be a multiple of $15,000. So I could change this to 55,678 as an example. There's no max, so I could do 700,000, right? Just anything above that minimum investment. I'm going to put it here at 100K as this example. So to lock in my $100,000 to the club, all I have to do today is pay a 3% transaction fee to lock in my spot. So that is 3% on 100, that's $3,000 today. If I change this back to the minimum, it'll stay 3% and show you 450. So it's a 3% today. And then once we're in the closing stage, and I'll talk about the closing stage here in a second, that's when your wire or an ACH transfer of the full $15,000 is due. You can pay that transaction fee with a credit card or bank account. Enter in your information here. Just make sure you're checking the checkbox. This is a confirmation you understand this is a lock-in fee. We're treating this as non-refundable because we want to make sure that Gage and the team, when they go to fund this, that your funds actually show up. So we want you to have some skin in the game. When you press this button here, your dollar amount will get allocated to the funding goal, and you are now a club member. And in this investment club model, one of the ways you get to participate is by voting. So right down here, and how this opportunity works is, it was a lot of what I just articulated, but feel free to read this over. But in this club model, you get to vote. And so we have some agreements for you to vote on down here. These are things like you're going to actively participate and vote. You get to vote on voting. I know it's kind of fun. The investment criteria, target returns and duration, and then most importantly, that agreement to first potential deal, the one we were discussing tonight. So if you are new to Fractional, we like to say that we do all the boring paperwork so y'all can make money and have fun. So let's say that this club gets up to 20 investors. Fractional will create an LLC that those 20 investors become the members and co-owners of, and that LLC is the club. So we create the LLC, we do a customized operating agreement, we stay on to do the taxes compliance of the LLC. We'll do disbursements of those quarterly distributions of interest, do K1s for everybody's taxes, and we're that neutral third-party service manager to host your club on Fractional and to just kind of manage you for the duration of your club. So that is it from me. I will stop sharing my screen and kick it back over to the team.
Cool. Thank you, Kyle.
You're welcome.
We've got some time for some questions. Kind of leave the room open for whoever likes.
Go ahead.
Hey, Josh, how you doing?
Good. How are
Right.
you?
Doing well. Looking forward to seeing you tomorrow morning.
Yes. Hey. Are you guys gonna do any equity positions at all, or is it just straight loan essentially, where it's paid back in 18 months?
Right. This is this one is a debt one. Yep. There's no equity attached at this point.
Okay. Awesome. It looks amazing, by the way. So
Awesome. Thank you.
Also, if anyone has any questions moving forward, the majority of you should have my email. I sent everyone a reminder of this meeting today, so you should have my contact on your end. Feel free to reach either Gage or myself, and we will give you all the explanations you may want or need. Does
Yep,
anyone
that's-
have any questions right now?
I have a question. So to belong, so if I understand correctly, to invest, we're going to be an investor, to be part of the club, we're going to invest 3% of whatever we are lending. Is that correct? I
That
think
is
that's
correct.
And so because I'm not math savvy and I'm new to this, would that then mean that instead of the 15% return we have annually, that we'd really be getting 12%?
Kind of. So this is a 2-year club. So
Got it.
the 3%, if you wanted to factor in annually, it's really 1.5%.
1.5, yeah.
But for the total 24 months, yes. So it'd be 1530. So minus that 3%, be 27%.
Okay, thanks so much.
Yeah, you're welcome. Great question.
Yeah.
I have
absolutely.
a question on the timeline. Hi, Gage.
Hey there.
What is the timeline that you're looking for on the funds? I know you're closing next week, but you mentioned you have funding and or hard money and private capital, but like if I had some capital tied up on another project, could you still use it later in a month or?
Yeah, no, I believe so. This will take some time. And us being new to fractional as well, this is going to take maybe a little bit more time than the clubs that are already further established. So timeline of it all, like there are different phases, and those that know me, like I will keep going. We'll get this thing closed. I'll start into the campground. I will fund that. And if this investor club is still gaining traction and filling up, and it does reach a deployable level, because once we all vote, the way I understand it, Kyle can correct me if I'm wrong, but in my language of it all is once we say, all right, yeah, the goal's 700, but maybe we're far enough into the development that we can say, well, we've got commitment for $500,000. We're all going to vote, and we could just call for the $500,000.
Yeah.
But at that point, the LLC has been created and it's done. So we would be, once we call it due, it's kind of a, it's
I see.
finished.
Okay.
So I'll be letting it gain traction, to speak like Wendy. You know, we know each other. I'm just going to let it gain traction. And then once it's at a deployable level of funding, we'll all of us that have funded it will say, do we want to do this? And we'll vote.
Okay, that's helpful.
Sure. And then even with Patty's question earlier, like if anybody wants to grab a call, here later on, especially into later part of next week, after I get this deal closed. But at any given time, and I could probably even draft up something to kind of further explain how those points work and how what it looks like over the length of the loan, because it's not really just simply 3% less. Kyle kind of spoke to it, but it is an investor club. So if we're all in the club and we need something to happen to make it work, we can figure that out as well.
All right, so this meeting will end in about 5 minutes. So I think we have time for one more question if anyone has any. I just don't want to sound rude whenever the connection simply shuts, but the meeting will self-terminate at 8 on the dot. So does anyone have any other questions?
I have a quick question, and it's okay if I get cut off. Hey, Gage and Chris,
Hey,
how you guys doing? This is all amazing. When if we are to commit on fractional, I didn't catch if we are sending money quickly, or is it not, do we not actually send money until we decide on when it's going to actually be deployed? Are we sending money and it instantly starts, or is it later? You know what I mean?
Yeah, great question. I could have been more specific. I apologize about that. It's just the 3% transaction fee as your commitment. Once the club is fully funded at that 700, or as Gage has mentioned, at a deployable amount of capital, and everybody agrees to move forward, only then are your funds due, because you're not going to send your funds directly to Gage. You're not going to send them to Fractional. So we'll create the LLC. We'll create a bank account for your LLC, and then you send in your funding to your own bank account for the LLC.
Okay. So it's just a commitment for now. And then when you say when we all vote, what exactly would we be voting on? Like how to use what you're going to use it for?
On the property. So right now on the club page, there is a vote to vote on this property. And so when the time comes, if the vote has passed, the funds would be deployed into this asset.
Okay. So it's just a matter of if this is the project we want to work on or put our money toward. Okay. Sounds good. Thank you.
You're welcome.
All right, I think that's it for tonight. If anyone has any questions, please reach out, email, text, any way, shape, or form. We're here to help to clarify any of those questions. Gage, you want to say anything else?
I just thank you everyone for joining us, and really appreciate your time. Look forward to seeing most of you in the next few days, probably all of you.
Great opportunity and great webinar. Thank you so much.
All right.
Thank you.
Gage.
Thank you so much. Everyone have a great night. Bye.
Thanks.
Bye.